we'll spend a bit more time talking over retirement issues that really matter to you. Are we aware of it in Colorado, and why is it important for us to be aware of this upcoming deadline of January 1st, 2026?
And when this act expires, tax rates may revert to the higher levels that were in place before 2018. So knowing the deadline, it gives you a chance to take advantage of current tax benefits while they're still available. And this might include maximizing contributions to tax advantage accounts, or executing Roth conversions, or realizing gains at lower tax rates. Proactive planning can also help you lock in tax savings before these potential rate increases. And higher taxes, it means less disposable income. So we still have time to adjust, our financial goals, our budgets, our spending plans accordingly to really ensure that we stay on track with your long-term financial objectives. Even for business owners, the expiration could mean changes in business taxes and deductions and credits. So understanding these changes, it really can help us strategize your distributions and minimize the tax impacts on your retirement income.
Barb, do they typically have a good handle on how taxes might impact their retirement income at all?
Honestly, Ralph, they just don't fully understand how taxes can impact their retirement income and how different types of retirement accounts are taxed differently. So, for example, traditional IRAs and 401ks are funded with pre-tax dollars, meaning withdrawals in retirement are taxed as ordinary income. In contrast, Roth IRAs are funded with after-tax dollars. So qualified withdrawals are tax-free, and many folks don't factor in the potential for significant healthcare costs in retirement, which can also have tax implications because you have to take out more withdrawals from your retirement accounts to cover these expenses, and that can increase your taxable income. And between Social Security and your other retirement income sources, it can create a higher tax burden than a lot of folks are anticipating. We discuss strategies to help them manage and maybe even reduce their tax liabilities. It is greatly appreciated because folks just don't understand.
What do we overlook and we're just missing it, Barb, when we're trying to create an income plan, hopefully with you for the future?
Well, I find, Ralph, that many people, they just underestimate the impact of, say, the inflation on their retirement income. And over time, inflation can erode your purchasing power, meaning that the same amount of money will buy less in the future. And folks also underestimate how long they might live. And with advancements in healthcare, we're living longer. And I find that people don't account for maybe the impact of market downturns on their retirement income. Also, not having a well thought out withdrawal or distribution strategy, that can lead to inefficient use of your retirement savings. And Ralph, we've discussed many times how healthcare costs can be a substantial cost in retirement. So I find that many people just overlook what the impact is of those medical expenses, even long-term care expenses. And people also overlook the importance of the tax planning like we're talking about, or knowing how different income sources are taxed and failing to plan for taxes. That can really result in a higher tax burden. So all of this has to do with income, and it's so very important. It's the first area of our financial endurance plan, is to make sure that we have income, guaranteed income, that will last as long as you need it to last.
How do you talk to people in Colorado, Barb, about what opportunities right now for us to save on taxes before the rates change in 2026?
And that's a great question, Ralph. And really how I approach this is, first, we start by reviewing, their current financial situation, and that includes their income, their investments, their retirement accounts. And this really helps us identify areas where they might be paying more in taxes than they need to. We look for ways to maybe maximize deductions and credits, such as charitable donations. And there's some tricks on that, especially using your RMDs. And we discuss estate planning strategies to reduce possible estate taxes. And one significant opportunity is converting traditional IRAs or 401k funds into a Roth IRA. And this can be advantageous so that later on, we're not paying taxes when taxes could eventually be higher.
Absolutely. Then, Barb, how do you help us create a long-term retirement strategy when we don't know how the tax rates will change in the future? How do you come up with a solid plan when the tax rates may be all over the map in the next couple of years?
The taxes are going to change during that period of time. So we really encourage our clients, to spread their assets across different types of accounts. There's taxable, tax deferred, tax free. And by using this approach, it provides a lot of flexibility to draw income from maybe the most tax efficient source, regardless of future tax rates. During the years when your income might be lower, we look at converting some of your traditional IRA or 401k assets into a Roth IRA. So you pay the taxes on the conversion now, but then those funds grow tax-free and they'll provide tax-free withdrawals in retirement. Also understanding how to take proper distributions, that can make a huge difference. Maybe delaying Social Security benefits, that could reduce taxable income early in retirement and allow for maybe a more favorable tax treatment on their income sources. And then that estate planning, that can also mitigate future tax impacts. Utilizing trust, gifting, there's so many things that we can do.
But when our taxes will go up, can you recap this issue of tax changes for us?
I sure can. What we've been talking about today, the possibility of living a long life in retirement. And one of the ways to help your money last is to seek out every opportunity to help reduce your tax bill. Find ways to help put that money back into your pocket for your retirement and for your heirs and your loved ones. I want to help you understand, the potential impact that taxes can have on your retirement savings and learn about ways to reduce or maybe even eliminate taxes in retirement. Create an income strategy so that your retirement income will last as long as you need it to last.